Will it be a bull or a bear today? Coin seems to like bulls quite a bit. Wow, it's a bear. Two bears in a row. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Little different view here today. Got a view of the Hillsborough Inlet, which is really a beautiful inlet. That's one of the older lighthouses down here that still uses the big crystal lens. And this is where I go in and out fishing with my boat here, and a couple boats coming in. Lovely day. I'd love to be out there myself. However, like you, it's a working day. So, some of you, I guess. Let's take a look at spot prices today and see what's going on here. Currently, gold's at 1814. Overnight markets show it between 1808 and 1815. When I say overnight markets, I mean since yesterday's New York close and when the overnight markets open, and since this morning. So it looks like a high of 1815. That was probably here this morning. Again, I didn't look early, had a few things I had to do, so I'm not quite sure what time our high was today, but looking like it was not too long ago based on this 1814 level here. And silver sitting at 25.50. Nice strength in this mid 25 range. I'm liking it. Overnight range 25.27, 25.61. Platinum 1,044. Again, 1,043 to 1,059. It's just kind of sideways. It's the ho-hum summer months, you know, and we're going through our little slow period. I think just across the board, everything's quiet out there. People are getting ready to send their kids back to schools. I think some people are. A lot of uncertainty out there. Economies are just kind of opening up, and again, we've got our summer vacation months and school coming up here, I guess. I believe this happens every year, and I forget that business and everything gets slow this time of year, even the markets typically. However, it was pointed out that we've had some pretty hot August months as far as hot markets go with gold and silver, so stay tuned. Let's see what happens here in August. Let's move along again, not talk about good opportunity to buy here. You know, as I said, one day you're going to look at $2,000 gold. I know gold's not even 2,000 right now, and silver at 30 bucks. And again, silver's not at 30 bucks, but one day you're going to look at $2,000 gold, $30 silver, and $1,200 and $1,300 platinum, and you're going to say to your friends, man, I remember when platinum was $1,200. I remember when silver was 30. I remember when gold was 2,000. And you'll probably say the same thing when gold's at 2,500, and you'll probably say the same thing when silver's at 50 and platinum's at 2,000 or whatever the heck it might be, $2,500, 3,000. You know, these metals are going to continue to go up. I don't think we've seen the real growth in precious metals. It's funny with precious metals. They're usually held down, and we know there's a lot of manipulation and monkey hammering in the gold and silver markets. They're held down until they're not, and then they just explode to the upside. So we are in that period where we're just waiting for the explode to the upside part of this, and it's going to happen. You watch it. We're going to just like we went from years and years of sitting in that $1,200, $1,000 gold range for a long time. What was the next level that was set? The next level that was set was over $2,000. It's backed off since then to like 1,600, 1,700. Currently sitting at 1,800. However, we're going to make that next level that's going to be above the last high. Same thing with silver. Oddly enough, with silver, we've only seen that $50 mark twice. We're close to that $50 mark. The first one was 1980, and that was a whole different market than what we got going on today. A lot of similarities between the economy now and then. A lot of similarities, but the market was a little bit different, and quite a bit different. Not near as big and not near as bubbly. So I guess that's the best way to put it. And so, you know, I think silver is going to definitely break that $50 mark. It's been held down by some big short positions out there for quite some time. And rather than go into the manipulation and all that stuff, most of you know that. That's why you read gata.org, and we talk about that website all the time. Let's go over to ZH here and see what's going on. Again, not a lot, and I don't see too much news here, what I would call black swan events or events that could become black swans. I guess I should say that. Not too much articles here that, you know, I think corporate margins set to tumble as companies freak out about surging bad inflation. Inflation and the failure of the fiat dollars, or the decline of the fiat dollar, is not really going to be an overnight thing. This has been going on for quite some time. Inflation has. the decline of the buying power of the dollar. This has all been going on for a long time. This is nothing new for us. It's been what we are seeing and what a lot of people are noticing. It's been accelerated in the last decade or so. And we're seeing that acceleration even more with the irresponsibility of our people up in D.C. And again, I'm not going to say one side or the other because it takes two to tango. And we've got big issues. And too much spending, too much boneheaded decisions. We've got people running this country that have no clue about economics, no clue how the system works. All they know how to do is spend, spend, spend. And we've got a Federal Reserve System that is rigged by bankers, manipulated, monkey-hammered, whatever the hell you want to call it. So we've got two things working against us, folks. But the nice thing is we've got gold and silver. That's how we're going to preserve our wealth. And when we talk about how we preserve our wealth, who else preserves their wealth like that? Who else buys gold and silver? Well, probably not your neighbor, most likely, because a lot of Americans, a lot of people don't own gold. That's the truth of it. They may own some gold jewelry, they may own this, but us stackers out there, people that buy precious metals, you're pretty rare birds for the most part. Most of your neighbors and a lot of people you know own very little gold. But that will change at some point, possibly, unless unless it just gets outpriced. They'll be like people that can't afford homes, the people that can't afford to buy gold and silver. But meanwhile, keep stacking it as you can. I know where am I going to go from here? And let me see, what do we got going on here? U.S. factory orders top 2018 highs. That doesn't surprise me. And there's nothing really positive per se about that. It's a dead cat bounce is what we're seeing right now. And that's exactly what we're going to see in this entire economy. Nothing was fixed prior to the closures. Nothing was fixed prior to the closures. We just continue to add more Band-Aids and throw more money at it. So more plasma. Add more Band-Aids, throw in more plasma and blood. And it's just seeping out. And it just so nothing has been fixed. And what we've got going on here is just an acceleration and the decline of the dollar. And factory orders and these kind of things that you're going to see kind of go up. Sales, retail sales are going to be up. People are going to be buying some more goods. Some goods are going to be tough to find, and manufacturing is going to start cranking up for that. But again, it's only because we went to a dead flat zero. Our economy is sailing along. Imagine this. I brought this analogy a couple times up. We're sailing along at 60 miles per hour. We're cruising down the highway, and 2020 comes along, all of a sudden, boom, dead stop right on the highway, boom, to zero. Maybe a crawl 5 miles per hour or whatever, but to a dead stop zero. And here we are on that highway. We're stuck in behind all this traffic for a whole year. We're just looking, when is this ever going to end? And we're still not sure if it's going to end in a lot of places in the country. Florida's been very fortunate because our governor has kind of opened things up, thankfully. But you're sitting on this highway saying, when is this traffic jam ever going to end? Finally, it kind of does end. The traffic opens up. And you say, okay, but traffic's only going 20 miles per hour, and or maybe 30. Maybe it gets up to 40, and you're like cruising along and saying, oh, this is great. All of a sudden you realize there's still a whole bunch of traffic up ahead of you, and you're not going to get back. Well, anyway, my point is that it's just like if you were stuck in traffic and all of a sudden the traffic opened up and it was going 30 miles per hour. It beats the hell out of what it was doing, and you may look at that as a positive thing. Oh, it's getting better, but the traffic in front of you has gotten no better, and you're going to spend the rest of that trip going 30 or less. And that's exactly what. Boy, that's a confusing analogy. Sorry about that, but that's what I see the economy. The economy was cruising along at 60. 2020 comes along, 0 miles per hour. Things start to open up in 2021 for a lot of places. Now we're cruising along 10 miles per hour, 20 miles per hour, maybe 30. Maybe we'll get up to 40 or something like that. However, they've done nothing to fix the traffic jam ahead of you. So we've still got major issues here. And we're not done with these folks. This is just a dead cat bounce as far as the economy goes, in my opinion. And let's move along here. Well, I didn't mean to sound so negative there, but really they spin, they fix nothing. They didn't fix anything. And like I said, it's like a patient that's bleeding out. All they did was add Band-Aids to the wounds and The patient keeps getting more wounds start popping up on the patient, and they keep pumping more blood into it, which is money. You can call that money. They've done nothing to fix anything. Peter Schiff talks about this, and I'm probably on the same page as Peter Schiff on a lot of these things. Smoke and mirrors, and the smoke they blow up our asses and all that kind of stuff here, especially media. Inflation continues to run rampant and is distorting the entire economy. In a recent podcast, Schiff explains how rising prices create the illusion of economic growth. And that's kind of what his article is about here. It's in ZH. Also, his video you can watch here just by clicking on that. ZH is a free website. You can read these articles for free. And again, this is called Peter Schiff, Fake Economic Growth and Stealthy Government Default. And it's exactly what he talks about. GDP growth for the second quarter this year came in lower than expected. Even so, the economy still appears to be experiencing solid growth. But a deep dig into the numbers reveals a lot of smoke and mirrors. That's kind of what I just said. The media's focus was on the 6.5% number, so-called real growth. That number is adjusted for inflation minus inflation. The nominal GDP gain was about 13%. Peter said the divergence between these two numbers really puts the inflation level into perspective. This is not real technical, but unless you really love economics and you love talking about this kind of stuff, I don't want to bore you with this. However, Peter does point out, though, and I'm going to go over to the captions here because this kind of says it all. So despite all the fanfare about all this economic growth, all of this economic growth is, in fact, an illusion that is created by inflation. Inflation creates the illusion of economic growth even as the economy is not growing. And Peter kind of breaks down the GDP components here, shows you why that's true. And again, I'm going to go into just the quotes here because more or less without going into the math of everything here, which you can read yourself. So Peter says, so we had no legitimate economic growth at all. All we had was people spending money. And one of the reasons they spent more money is because all the things they were buying cost more. So it's rising prices, not growing economy that is behind the gain in the current GDP. And I would have to agree with that 100%. If you get a chance, read this article, Peter Schiff, Fake Economic Growth and Stealthy Government Default. It is in ZH. You can read it for free. Or you can, and also, I may get a chance to watch this myself, Inflation, Stealth Default, and Fake Growth. It's the Peter Schiff show. I don't watch that very often, but I should start watching his stuff a little bit more. I agree with a lot what he says. GAT.org. This should be on your what is it, bookmark bar up above. I talk about that all the time. The smartest guys out there when it comes to who the players are, how they manipulate the game, and all that stuff. They've been around for quite some time. I looked over to see if there's any new articles here to read. Not too much. I did click on this one, Why USA's Gold, and that led me to a couple of other articles. Real quickly, there's nothing real quick about reading this stuff, sorry, but as quick as I can, let me go into news and views, and this is by USA Gold. To fully understand markets, understand gold it is the key to financial wisdom. By learning of its role as a financial asset, one will discover universal truths about the value of money, and hence the underlying value of assets. It does not do much good, for example, to make a small fortune in the stock market, only to see it dwindle or disappear overnight in an inflationary storm or an implosion in the financial markets. And you kind of see where this is going. The importance of owning gold. Good article. Again, I'd like to see some of you folks read this if you get the time. News and Views, August 2021, forecast commentary. And well, actually, you can find it right here. Look, go to GAT.org and type in this one, Why Gold, USA Gold, News and Views for letter August Explains. And it's a free article you can read on GATA yourself. But they go over a couple things that I found interesting. The central tenet to the wisdom of gold lies in the status of the most liquid and widely owned asset that is not simultaneously someone else's liability. Former Federal Reserve Chairman Alan Greenspan once remarked, "No one refuses gold as payment to discharge an obligation. Credit instruments and fiat currency depend on the creditworthiness of a counterparty. Gold, along with silver, is one of the only currencies that has an intrinsic value. It has always been that way. No one questions its value and has always been a valuable commodity, first coined in Asia Minor in 600 BC. And really, that's kind of what we talk about here all the time on these videos that I do with you, is that gold is about wealth preservation, and particularly in economic times that are bad, or in times when currencies are going to be debased or currencies are declining in their buying power, you can say it that way, gold is a real winner. So is silver. And I'll read a couple more little spots here, and because it's not too long. In 2001, James Grant wrote an art essay aptly titled "For Real Money." It is a study of gold's role in the financial marketplace. Though 2 decades, that essay still resonates today. In it, he said that a new bull market for gold was already underway. Few believed him, but he turned out to be right. At the time, the metal was trading for $280 an ounce, and I remember those days. Over the ensuing 20-year period, it would rise to a little over $1,800 per ounce today for a total return of 567%, or just over 10% per year compounded. Gold reached a record high in August 2020 of $2,067 per ounce. He summed up the need for gold as follows, and to quote James Grant, there are many differences between physics and economics, but the greatest of these is that particles aren't people. Participating in a monetary system, clever people will exploit the rules in such a way as to eventually bring the system down. And that's what we're looking at with our politicians in D.C. and this is what he's talking about as well. And central bankers and such. The system in place subsidizes and encourages risk-taking and borrowing. Accordingly, leveraged financial structures and colossal debt abound, and that's exactly where we are today in our giant bubble, the biggest bubble we've ever had. So the gold standard, he says the gold standard failed by reason of its structure, perceived as rigid. The pure paper standard is failing on account of its lack of structure. So you see where they're going. You see where James Grant is going with this. The problem they had with gold is that they couldn't. It was very rigid. You have so much gold, and you can only create so much money out of that. And paper allowed them to expand the economy. Paper also allowed them to subsidize, encourage risk-taking and borrowing, which eventually, and always does, got way out of control, and today it's just insane, and puts us where we are today. But gold is a little bit more rigid. You can't just create gold out of thin air, whereas they can do that with fiat money. The pure paper standard is failing on account of its lack of structure. Anticipating the end of the dominance of the paper dollar, we have cast around for an alternative. The answer we keep coming up with, the one is you already know, gold and silver. And gold and silver, as we all know, has outlived corporations, it's outlived countries, it's outlived empires. It's been around for 5,000 years as a form of money, and it will continue to be so. Gold wasn't going to go anywhere when crypto showed up, and gold wasn't going to go anywhere when the fiat currencies were created. And as I constantly remind you folks, what do central bankers own? What do the elite own? What do billionaires own? They own gold, folks. They have gold stored in their safes, not so much cash. Central bankers certainly don't have cash stored in their vaults because they can just print it whenever they want. They have gold stored in their vaults, and why do they have gold stored in their vaults? Because they know it's real money. The stuff that they're printing is not. 2 years later, as gold began to nudge higher, Grant would lay out a similar argument under the title "Value Hedge." Another study emphasizing the need for gold in a private investment portfolio. And he says, the salient feature of the millennial economy is not, as claimed by Greenspan, its complexity, but rather the determination of the Federal Reserve to forestall bad things through money printing. That's a perfect way to look at it. The rich old speculator Bernard M. Baruch, forehandedly bought gold shares after the 1929 crash. Years later, a suspicious Treasury Secretary asked him why, and because, Baruch replied, he was commencing to have doubts about the currency. Many are beginning to doubt, and I think that's happening now, as he points out here. Many are beginning to doubt the strength of the dollar today. As well, they might. Following Baruch's example, they should lay in some gold as a hedge. Grant has refined the message a bit over the years. Gold, he said back in May, is not exactly an inflation hedge, but it is an investment in monetary disorder. Wow, what an interesting way to look at that. I like that. And again, I always say wealth preservation, which is what we have. If I'm right, there will be a world that will want tangible monetary stability because it loses confidence in central banks. When the cycle turns, people will want gold and silver. And when people consider the shortcomings of the Fed, they will turn to gold. Lay in a hedge. Financial wisdoms need not be hard won. And wow, I got through that whole article. I read this whole thing. Good article, and I'm glad USA Gold Coins and Bullion posted that. Thank you. Well written and well taken. Well, let's move along to the next one here, and this is kind of an interesting article as well. I'm not going to read this whole one because we'll be here all day, so take a look at this. This was also done by USA Gold. They wrote a couple good articles here. I got to give them a hand here. The 6 keys to successful gold and silver ownership. Basically, they go into detail, but who invests in gold? Institutions and hedge funds invest in gold. Yes, that's true. And what did we just talk about? And this is the reason why I wanted to point this out. Central banks invest in gold. Billionaires invest in gold. Private individuals invest in gold. And so what is gold's role in an investment portfolio? Well-written article. And again, I would suggest you take a read on this. You can get to it by going through gata.org. This website right here. Hit that article, and there's a link to the second one there too. Wow. Yesterday's show. Let's just go over a few comments here. I don't want to make this one too long. I'm trying to get these shows out a little bit earlier, but it's not helping when I start them late. So let me kind of breeze through here. I'd like to thank everybody that watched yesterday's videos. And for those of you who are new, I appreciate if you hit that like button and the subscribe button right there as well. I appreciate that very much. And let's take a look and see if there's any questions here. Things I can answer. Again, I'd like to thank all you folks for watching as well. Good morning. I'd like to hear your thoughts where precious metals are going from here. Up. Pretty simple, Jason. Up. I can't tell you, long term, medium term, up. As far as short term, I don't know. It's tough to say. Your guess is as good as mine sometimes, or probably most of the time. Thanks for watching, Joey and Mark. I appreciate that. Mark got his Type 2 Silver Eagles for $34 an ounce. That's not a bad price. And ordered a tube of maples for $29. You got a good deal there, Mark. Thanks for watching. And let me see here. See if there's any questions here I can answer real quick. I'm going to kind of just look for questions here. And I don't see too much. And, oh, someone had the Silver God smiling on them. Got a good deal there. Let's see, monkey hammering. Not too much to answer here. Nobody asked me too many questions today. But lots of thanks to all the folks that watched and all the folks that comment. Also, boy, yesterday, what a cute little fellow this guy was. I turned on the live cam, and there he was. Pretty cool. Have a couple drinks. Let's see, silver, best deals out there right now is still 90%. You can pick it up for, whoa, I digress. Hold on. I'm looking at the new spreadsheets. Guess what? 100-ounce bars are cheaper than 90%. So 100-ounce bars are a better deal than 90% right now. And 1-ounce and 10-ounce bars are close enough in price to 90 where I can say I recommend them. 1-ounce bars, generic, 10-ounce generic bars, and 90% is the best deal out there, bar none, unless you get into some of the more esoteric products. So I'm going to say those are the best silver deals out there. Start looking for 1s and 10s. You should be paying no more than $3.75 over per ounce for 1-ounce and 10-ounce silver bars, and no more than $3.25 an ounce for 100-ounce silver bars. Best deals in gold. Let me just see if there's any changes today. I was surprised with the silver change today, but gold, a little bit. No, not too much. Eagles are still about the same. KRs are about the same. Maple Leafs are still the same. And looks like gold bars are still the same price. So best deals out there are still, was it 90 plus the 10 left, 80, spot plus $80 for 1-ounce gold bars. Those are the best deals. Balcombis, Perth Mint. What else? What are the other gold bars? A lot of U.S. mint bars too. Any good, well-made 1-ounce bar that you can pick up in the cards and pay no more than $80 an ounce is a good deal. If you can pick up any maples or KRs and you're not paying more than $9,500 an ounce, I think that's a good deal now. Again, product is a lot more available than it was, folks, fortunately, so good buying opportunity for a lot of you out there. And that brings me up to the top 10 reasons to stick with the local dealer. I'm local, of course. I advertise to beat APMEX, JM, and SD Bullion on their prices. Why do I do that? Because we live in an online world now. If you want to be a local brick and mortar guy, you got to compete with the online guys, and I do. So my prices, I advertise to either match or beat those guys. And you should be able, if you don't live in my area, by the way, I can't ship to you. I only deal locally. So if you don't live in my immediate area here in South Florida, you're going to have to find your own local dealer. But I encourage you to do that because there's great reasons to shop local, whether it's coins or whether it's jewelry, whether it's tires. It strengthens your local economy, as it says here. I'm not too concerned about that, but that's probably true. It reduces climate change impacts, support community groups. Yeah, sure. Keep our community unique, create more quality jobs, get better service, invest in your community, encourage local prosperity, and put your taxes to good. Well, I don't necessarily agree with that, but at least it's kind of keeps that money, even taxes, in your area rather than somewhere else. And buy what you need. Don't buy the hype. And that's the nice thing about a good local merchant. Most local small businesses won't sell you hype. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4, Mondays through Fridays. Happy to help you out with whatever you need. Hey, thanks for watching. Make sure you hit that like and subscribe button, and I'll talk to you tomorrow. Have a good day.